Hi, my name is Kamlesh Sawant. Welcome to my YouTube channel. Today we will learn about investment in stock markets and other instruments. Why should you invest? There are a few compelling reasons for one to invest. Number one is fight inflation. By investing, one can deal better with the inevitable growing cost of living, generally referred to as inflation. Number two is create wealth. By investing, one can aim to have a better corpus by the end of the defined time period. Number three is to meet life's financial aspirations, such as dream house, dream car. Where to invest? When it comes to investing, one has to choose an asset class that suits the individual's risk and return temperament. An asset class is a category of investment with particular risk and return characteristics. The following are some of the popular asset classes. One is fixed income instrument, second is equity, third is real estate, fourth is commodities. Fixed income instruments. There are investable instruments with very limited risk to the principal and the return is paid as an interest to the investor based on particular fixed income instrument. The interest paid could be quarterly, semi-annual or annual intervals at the end of the term of the deposit. Typical fixed investments include one is fixed deposits offered by banks, second is bonds issued by the Government of India, third is bond issued by government related agencies such as HUDCO, NHAI, etc. Fourth is bonds issued by corporates. Equity. Investment in equities involves buying shares of publicly listed companies. The shares are traded both on the Bombay Stock Exchange, that is BSE, and the National Stock Exchange, that is NSE. Where an investor invests in equity, unlike a fixed income instrument, there is no capital guarantee. However, as a trade-off, the returns from equity investment can be extremely attractive. Indian equities have generated return close to 14% to 15% CAGR over the past 15 years. Investing in some of the best and well-run Indian companies has yielded over 20% CAGR in the long term. Identifying such investment opportunities requires skill, hard work, and patience. Real estate. Real estate investment involves transacting, buying and selling of commercial and non-commercial land. Typical examples would include transacting in sites, apartments, and commercial buildings. There are two sources of income from real estate investment, namely rental income and capital appreciation of the investment amount. The transaction procedure can be quite complex, involving legal verification of documents. The cash outlay in real estate investment is usually quite large. There is no official metric to measure the returns generated by real estate. Hence, it would be hard to comment on this. Commodities. Investment in gold and silver are considered one of the most popular investment avenues. Gold and silver over long-term period has appreciated in value. Investment in these metals have yielded a CAGR return of approximately 8% over the last 20 years. There are several ways to invest in gold and silver. One can choose to invest in the form of jewelry or exchange traded funds ETFs. A note on investment. Investments optimally should have a strong mix of all asset classes. It is smart to diversify your investment among the various asset classes. The technique of allocating money across asset classes is termed as asset allocation. Risk and return go hand in hand. Higher the risk, higher the return. Lower the risk, lower is the return. Investment in fixed income is a good option if you want to protect your principal amount. It is relatively less risky. However, you have the risk of losing money when you adjust the return of inflation. Investment in equities is a great option. It is known to beat inflation over the long period of time. Historically, equity investment has generated return close to 14 to 15%. However, equity investments can be risky. Real estate investments requires a large outlay of cash and cannot be done with smaller amounts. Liquidity is another issue with the real estate investments. You cannot buy or sell whenever you want. You always have to wait for the right time and the right buyer to, or seller to transact with you.